To remain updated with the latest business news, click on the bell icon.
What's the impact of the Fed rate hike on India and the Indian equity markets? Some sections are expecting a rate hike by the RBI, while others feel that inflation is not as much a threat in emerging markets like India as it is in the developed world. The war in Ukraine has put the focus on crude oil and other commodity prices. If they sustain under $100 a barrel, the RBI may avoid hiking rates and focus on supporting growth. What about stock markets? What does the Fed rate hike mean for Dalal Street? The quarter-point increase is a relief for those fearing a half percentage point rise. FPIs who've sold equities worth 1,51,741 crore rupees in cash since last October may return, giving domestic institutional investors who bought shares worth 1,67,269 crores in the same period a chance to book profits. Indranil Pan joining us now to decode what the macroeconomic environment is looking like. Indranil, thanks so much for joining us. What do you feel is going to be the game plan when it comes to the RBI? Is inflation as much of a risk here in India, following suit after we've seen central banks around the world address inflation concerns? What do you feel the RBI is likely to do here?
For that, I think the headline CPI, which is mainly the gauge that the RBI looks at, let's break it up into three parts. One is the food, which is about 47% of the overall inflation. There is the second part is more the fuel related, the petrol and the diesel prices and how it impacts the transportation cost. And the third is the stuff like the items that we consume, including the services in terms of healthcare, education, etc. The food is not a problem for India, simply because even as the wheat prices globally are on the firmer side, simply because we are well stocked in terms of food. Our Kharif as well as Rabi for the last season have been good. And even though we don't have any met projections at this point in time, we go with the assumption that there is no disruption in terms of food production in India. Indeed, India's stocks are so surplus that India can actually sort of move to exporting wheat to cool down the global wheat prices. So that's not a big worry for India. The worry is the fuel prices. And the commodity prices, which is more a problem in terms of the wholesale price index rather than the consumer price index. Given the weak demand conditions, we don't think that there will be a one-on-one pass-through from the WPI to the CPI. But having said that, compared to the last inflation target that the RBI had provided for FY23, which is 4.5%, they might be forced to move it higher by about 50 to 70 basis points, which will be the new forecast that will come out in April. But even then, we are comfortably within the 6% mark. So I don't see an immediate reason for the RBI to move rates. Indeed, the negative implications of the higher commodity prices and the fuel prices, especially in terms of its implication for the private consumption expenditure, could be larger than the implications of a relatively higher inflation immediately. And that's the reason why the RBI should be holding back on any monetary policy action on the higher side immediately.
Okay. In the last policy, of course, they continued to be fairly accommodative. Indranil, do you feel that attempt to remain dovish in order to support growth is going to go a long way? Do you see the economy bouncing back?
I think that's a difficult question to answer, and in terms of how the fuel prices is absorbed by the economy becomes relevant. But for instance, the government has yet not hiked the fuel prices, and a large portion of the fuel price increases that should have otherwise been passed on to the consumers is being absorbed within the fiscal. Going forward, we need to watch out the overall crude oil prices. It has indeed come down from its peak of about 138, 139, the Brent crude, back to around 100 whereabouts. There are some indications that the talks between Russia and Ukraine might actually yield some results. and the oil inventories in the US suddenly once again have gone up. So all those factors are feeding into the global fuel prices, the crude oil prices, and to that extent, the fiscal implication of that, whether the government is willing to give a excise duty cut or is absorbing in the fiscal in terms of a higher fuel subsidy, all those become relevant in terms of how much it is passed on to the end use consumer, and therefore the negative implications of that on growth. But having said that, I think in terms of the overall production process, and if logistics costs were to go higher, there could be a hit to the real economy to the extent of about 30 to 50 basis points.
All right, Indranil, thanks so much for joining us. Great speaking with you and getting
Thank
a
you.
sense of how things stand currently.
If you like the video, do like, comment, share and subscribe.